Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And right now it is 11:46 p.m. and I am so sleepy. In fact, only sleepy rich people will pay off debt this quickly using a strategy called velocity banking. If you don't know anything about me, I'm sleepy and I might possibly be rich because I paid off my mortgage under 3 years. And you know what's crazy? Every time I tell people that, I feel like I'm actually lying, even though it's the truth. Like I feel, how does that work? Like I feel like I'm actually lying, but I'm telling the truth. When I say, "Hey, I paid off my mortgage under 3 years." Oh well. So, a funny story before we get started. I actually got approved for a $280,000 HELOC. I signed the paperwork on Monday, but I've had two other HELOCs, but I totally forgot there's a 3-day cancellation period. So if you take a look at this website by Citizens Bank, I don't have an account with them, but this webpage describes accurately what would be the most common experience after closing on a HELOC. But take a look at this. On day one, after you close, from business days 2 to 4, meaning anything that's not on a Sunday, you have the right to cancel. No, they can't penalize you for canceling from business days 2 to 4. And then once business day 5 sets in, that's when you can use your home equity line of credit. So from 2 to 4, I'm just been like waiting and waiting and waiting to use it, and I'm like a little bit bummed out. But as a sleepy and possibly rich person, at least we can just do velocity banking spreadsheets at midnight or close to midnight. And so here we go, right? Can I do a Mario Italian accent? Probably not, but that's what I think of when I hear, "Here we go! It's me, Mario!" Oh man, my voice has gone pretty deep over the past couple of years. Okay, so what is velocity banking? All it is a debt payoff strategy using your line of credit as your main operating account. Only two requirements. Number one is a budget. You ever do a budget like this? Income, expenses, savings, and then when you do an expense breakdown, all you got to do, okay, is make sure that you list every single debt that you have. And anything that is not a debt, it goes into this other category, right? You can use a estimate, guesstimate. I heard the word guesstimate is technically wrong because the word estimate implies like a guess. So when you say guesstimate, it's like guess estimate, if that makes sense. And if that doesn't make sense, that's because this is just blibber blabber jibber jabber by rich. Oh, I'm sorry, not rich, or possibly rich, sleepy person. Okay, so we have a budget, and now we need a line of credit as our main operating account. Folks, I still get comments about like how do I get a line of credit when my credit's bad, and I'm going to tell you the same answer over and over and over again that banks don't lend money to people who need it. So put yourself in a position to not need money. And I know that seems like a ridiculous answer, but if you have debt, once upon a time you're probably in a position that where you really didn't need that money, or at least from the bank's point of view, you didn't need that money, right? And then they give you one debt after another, kind of like a drug, a fine purveyor. Oh, it was purveyor consumer. Oh, I can't even think right now. A fine seller. I can't even think. So bad of white powdered goods and services. I don't even know what I'm talking about. Okay, so let's just do this. Yeah, so this is an example of a home equity line of credit. So this is mine, and basically it's really cool. You just go to bank's website, click a button, and then cash in your checking account at 8%. So this is gonna be 8%. Sometimes they charge really high, like 15, 17, 18, but this could even work with a credit card, right? Because let me go back here. What do we need to do velocity banking? Yes, we have the same income, but we have zero savings. And this is the part that freaks people out, right? So I'm going to tell you that I practice what I preach, beginning zero, ending zero, and some money here that I might have gotten in some suspicious, sus ways. And here's the crazy part. What if I did this, right? Just to kind of um, stir up, like, is this guy real or not? What if I took out a $20,000 withdrawal or like a really huge withdrawal, like 15 grand, and then put it back in it and hadn't made any more money for the rest of the month. I'm pretty sure people would do that. But the other thing too is that you can't really get the line of credit if you don't have the income to support it, right? So, yes. So now let's go ahead and get started. We're going to copy our expenses, right? Let's go ahead and copy them. And then we're going to copy them right here. And let's create this thing called cash flow, which is C2 minus C3, right? That's our cash flow. And then what we do is we select the line of credit as our main operating account. I'll just assume we have a $30,000 home equity line of credit. Home equity line of credit usually have the best rates and the best limits because when you offer your valuable asset, which in this case will be home equity, then the bank will lend on it. It's pretty crazy. It's also crazy the amount of paperwork you gotta sign. When I went to the closing attorney, he's like, "Oh, you don't have that much paperwork," and it was like 20 pages. So think about your typical residential real estate, how much paperwork it involves. So if the lawyer is telling me, "Oh, it requires 20 pages," I'm assuming like the typical residential closing like 40 to 50 or something, right? All right, so let's go ahead and move right this to the main operating account, which is our line of credit. So that's what we do in order to increase our cash flow. So 5 plus 8 plus 3. So that's 16K, right? 16K of credit card debt. So let's go ahead and move that here, 16000. Okay, and we did that. And simply by moving that credit card debt, whoa, whoa, we went from 1100 to 1600 in an instant. Oh my goodness, it was so easy. I can't believe that they invented it, right? Oh man, it is so hard being a rich sleepy person right now. I can barely concentrate, but it's okay. It's okay. We'll get through it. All right. So here's the last step of this. You put your entire paycheck into that line of credit, and then you take your expenses out of that line of credit, right? And then now your cash flow is going to be used to reduce the balance of the line of credit after every single month. So let's go ahead and do that. Let's do it. Let's do it. Let's do it. What is that even from? All right. So now to get the next month's balance, it's the previous month's balance plus the previous month's interest minus this cash flow, which is 1647.99. Okay. And then the interest is going to be based on the average daily balance. So let's go ahead and do that. Average, multiply it by the interest rate, divide by 0.085 or times, and then divide by 12. And then voila, we only pay $100 of interest. That's not that bad, right? And so after 11 months, when we just copy and paste these formulas, we could see we paid off all the credit cards, the 16 grand. All right, so that's, now we got to record our milestones, 11 months, 16K, whoop-de-doo, okay, not this one. And now what we do is to figure out the current loan balances, because what we want we want to, in general, tackle the short-term loans with high interest rates or credit cards with high interest rates, and then tackle these other amortized loans, right? And luckily we have this loan calculator here, where all I got to do is say the current month is 11, right? 11, 11, 11. And then, yeah, you take a look here, right? So, which one do I pay off? Long story short, pick the one with the lowest cash flow index. If it's below 50, should be fine. All right, so now let's go ahead and move this personal loan into that line of credit. I am going to do that. Yes, sirree, or ma'am, or blah. All right, let's go ahead and do this. And then now what we're going to do is move that personal loan into the line of credit. And by doing so, moving that personal loan into the line of credit, oh my goodness, our cash flow is over 2 grand now. 2 grand, 2,000. That's so cool. You know, even though that I know this myself, sometimes when I see the results, they blow my mind. I don't know what to do. You know, you ever like tell people that your mortgage is paid off in 3 years and they don't know how to react? Just because it's so uncommon in this country. I know, I know. I feel the same way too. Don't worry. We'll get through this. All right, so now this is month 19 where we paid off that auto loan completely, or the personal loan. And now let's just go ahead and do this. This will be month 19, right? And so now we got a cash flow index very similar. So let's go ahead and do this. We copy and paste this thingamajigger, whatever that means, and we're going to move the auto loan here. And let's go ahead and do that. And then we're going to do plus 17223.43. Yes. And then now we're going to need our new cash flow. So what's our cash flow? 2614.63. Holy. All right. So we got that. So that's our new cash flow. And then what? So let me just do this. So this is when at month 19, that's when the personal loan got paid off. 19 months. And so 16, that's 36K. Okay, not bad. So now let's go ahead and do this. Minus 2614.63. Okay. And let's go ahead and do that. All right. So now what we do is we just go in here, and then in month 26, right? Month 26, we added 36 plus 24, right? That's 60K. And now what we do is we pay off our mortgage. Oh my goodness, mortgage is paid off. Or it's not paid off. Mine is paid off. But now we got to do the mortgage, okay? So let's just go ahead and put the current month here, 26, $200,000. Okay, not that bad. So here's the thing I'm just going to say about the mortgage, right? Especially your personal residence. This doesn't necessarily apply to investment properties because usually there's not that differential in mortgage rates and line of credit rates. But if you put a full replacement mortgage of 3% in an 8 to 50% vehicle, newsflash, there's not enough cash flow to offset the interest rate, right? So if we take a look here in this mortgage section, take a look at the payment, which is $885, and you have to pay $210,000 for the $885, right? Not a lot of cash flow, but there's a lot of debt. And that's why if you move what we call low efficiency debts into a line of credit, it normally doesn't work out. And that's what I gotta say about like velocity banking on the internet. A lot of times I think, people kind of teach it wrong because it's too simplistic of explanation. And that's why people have told me they like my channel because they think other channels are too simplistic. And here I'm actually doing math. All right, so now we have two ways that we can pay this off. Number one is direct extra payments from here to the mortgage. That's one way you can do it, but that's a lot of work for me because I have to know exactly how much I'm budgeting to pay into that savings, or I'm sorry, the mortgage extra, right? I have to know that. Okay? And if I'm like one penny over, then I'm going to segregate my income, and that's definitely don't we want to do. Like no segregation of income. Okay. But one of the things that we can do as an alternative, we can do something called chunking where we take a bite out of the loan or chop it into pieces and then rinse and repeat over and over again. So what do I mean by that? Well, let's take a look here, okay? In the loan calculator, after about a little bit over 2 years, how much did we pay off? About $10,000. A little bit over 2 years. 2 years and 2 months. Isn't that crazy? Crazy. All right, but what if we do this? Why don't we take 10,000 and just dump it into the line of credit? So this is what we call a chunking method, where we just take a small amount of the loan, but again, this is going to be done in very last, right? Because Let's see how long it took. 1, 2, 3, 4, 5. Because debt payoff order is incredibly important. So something that took us 2 and something years literally took us about 4 or something like that. 4 or 5. But luckily we have a velocity banking calculator to kind of accurately calculate what the payoff time is. So let me go ahead and open up this velocity banking calculator that I have. And let me go ahead and switch gears. Where am I? Is this it? No, it's not it. What am I doing? All right, so now, okay. So you might be wondering, where did I get this velocity banking calculator from? I got it from Renatus. And this is where I originally learned velocity banking from in 2017. Now, what's funny is that I tried to talk to a lot of people back then about velocity banking, and nobody wanted to listen. And now that I pay off my mortgage under 3 years, nobody really wants to listen. Oh man, what a trip. Anyways, let's go ahead and fill in the deed/information. So I am going to do this, and this, and then this, and something this. All right. So what's the current balance of the loan, or the original balance? I think it's 210, right? So 210 at 3%, 210000. And what is the payment amount? Let's go ahead and do that. So that would be 885.37, 885.37. And then the current balance is, what is the current balance? I was just there a couple of minutes ago. So it is, oh man, I'm so sleepy. 200331.68. 200331.68. Okay. So now what we do is we type our income and our expenses. Our expenses is $2,000 a month. What is our income? I think it was like 5,000 some jigger thingamajigger 5,500. 5555555. Remember when Dave Ramsey was like, if $600 makes a difference for you, I think you were screwed, and everybody had lost their jobs. Irony. But anyways, all right. So let's say that we have, was it 8 or 8.5? Let me just quickly check. We have an 8.5% line of credit. 8.5%. Mm-hmm. All right, so now let's go ahead and move some of the line of credit here. We'll just do a small number like 6,000, and then we'll blam 5.2 years. 5.2 years. Okay, so let me go ahead and put that into the what's it called? Not the WhatsApp app. What am I even talking about? Anyways, yeah, that's what happens when you're sleepy and rich, right? So I have paid off. Oh, right. I know exactly what I'm going to do. My bad. I got to do the final recording of the time stamp. 5.2 years. Okay, so now let's go ahead and change gears. Mm-hmm. Okay. So now so it's 26 divided by 12 plus 5.5.2. So that would be about 7.37 years. So I'll say 7.3 years debt free. And let's see, like this. This would be, well, what is the total? So we did everything. So there was 60K. So about 270K, I think. Ugh. Oh, boy, I'm so sleepy and rich. Possibly. Allegedly, like OJ Simpson. That's my new thing now. Whenever I say something ridiculous that's actually quite true, I'll just say allegedly, hypothetically, like OJ Simpson. You know, one of the reasons why I think OJ Simpson went to Florida is because I think his money was protected in a cash value life insurance policy. I've always heard that, but I need to find a source of that. And he went to Florida for homestead protection. Not funny, but it kind of is. All right. So now Oh boy, it's 12:06 a.m. So does that mean that my home equity line of credit is available to use, or do I have to wait until the morning to wait for the bank systems to kind of I don't know if this is technically the right word, refresh or reset or something. I always notice that the bank systems always update like 3 to 6 a.m. or 7 a.m. at the latest. It's kind of weird. But let me just quickly log in. Well, folks, I just checked and my HELOC is still not available, so it looks like I'll have to sleep for it for me to be able to use it. Okay, no worries, everybody. It's Korean Lanta Mentorship, and in this video, only sleepy rich people pay off debt this quickly, and I'm sleepy and I'm possibly rich, not confirming it. Yeah. Good night, everybody, and hopefully we'll make a video tomorrow.